Welcome to the weekly combo podcast, where I'll go over the action in the market for the week of May 12th through the 16th, and then we'll look ahead to the week of May 19th through the 23rd. And this is a combo podcast because it combines the weekly update, the intermarket analysis update, the deep dive update, and the what to watch update into one concise podcast. Going through the weekly update, the markets roared higher this week, powered by the U.S China trade deal slashing tariffs. The U.S. cut rates from 145% to 30%, China from 125% to 10%, and this is supposed to last for 90 days. The S&P 500 ended up being up 5.27%. The NASDAQ led with a gain of 7.2%. The Dow rose 3.4%. Despite UnitedHealthcare's 23.33% plunge, and small caps climbed 4.5%. Year to date, the S&P 500 and the Dow are now in positive territory. The S&P 500 sits 23.2% above its April 7th low, just 3.2% shy of its all-time high. Tech, discretionary, and communication outperformed while healthcare trailed. Going through the technical outlook, the charts are looking up. The S&P 500 and most major indexes are above their 200-day moving averages. The S&P is short-term overbought, but less so on an intermediate-term basis, although it is overbought as well. Weekly volume was above average, though the daily volume shows us being below average. Sentiment at 71 is nearing extreme positive levels at 75, and the VIX is now below 20, which signals bullish returns. Long-term trends are strengthening as negative momentum fades. Going through the economic context, the 10-year Treasury yield closed at 4.44%, where it had been up over 4.5%, but it ended up climbing for the week. Inflation held steady with no tariff impact yet. CPI was uneventful, but PPI revisions were ticked upward. Mixed economic data, including retail sales, jobless claims, and geopolitical risks, such as the Russia-Ukraine tension and the India-Pakistan ceasefire, had little market effect. The Fed is likely to hold rates steady at their next meeting on June 18th with a 92% chance probability, though the July 30th meeting is still a toss-up and that will change many times. Some key observations. There is trade optimism, short covering, and FOMO, the fear of missing out, which helped fuel the rally. Mega caps and large caps, such as Nvidia, was up 16%, Apple was up 6.4%, and this helped lead the markets higher. UnitedHealthcare's CEO exit and suspended 2025 outlook dragged the Dow. The post-Friday Moody's U.S debt downgrade could shake Monday's open. Small and mid caps improved, but remain negative year to date. Commodities such as copper are in an uptrend, but pulled back, and gold weakened as the dollar showed some strength. Looking ahead to the upcoming week, May 19th through the 23rd, this week's economic calendar is light, with jobless claims on Thursday as the main highlight. The markets are overextended, hinting at a possible pullback, but momentum persists after breaking through resistance. Support levels should be watched. Historically, post-election years favor May, especially later in the month, often extending into summer. Now going through the intermarket analysis update. The VIX is nearing 20 and rolling over as the S&P 500 rises, signaling a positive outlook. The VIX to VVIX ratio and the VIX to move ratios are declining, and the Ulcer Index shows decreasing fear. Looking at bonds, the 10-year yield at 4.44% does raise concerns, but stocks may hold up unless yields go above 4.5%. The bond ratios are stable, though the rising tips to 7 to 10-year bonds hint at inflation worries. Large caps are outpacing small caps, growth stocks are leading value, and defensive sectors are weakening. Globally, U.S. stocks are outperforming Europe, and Canada hit an all-time high. Going through the technical rankings, the Qs topped the charts at 81.8 this week, followed by the NASDAQ at 76.6, the S&P at 65.2, mid-caps at 41.6, and small caps at 12.9, improving but still weak. Now going through the deep dive update. A long-term VIX chart with a 50-period exponential moving average still shows the VIX below 20, aligning with a rising S&P 500 and lower volatility. Declining VIX ratios and a neutral skew index are positive signs. The S&P 500 is 70.5% above its October 2022 low and up over 23% from its April 7th low. Growth is starting to outpace value, and large caps are leading. The technicals show the S&P above key moving averages with improving long-term indicators. We should also keep an eye on the yield curve, both the 10 to the 2-year and the 10 to the 3-month. Both are not inverted currently, but we'll watch that daily. Moving over to the What to Watch update. The markets are in a strong uptrend, holding above support, but short-term overbought conditions raise pullback risks. Positives include sentiment nearing exuberance, growth stocks beginning to lead, and bullish technicals such as the ADX, MACD, and RSI are improving. High beta names such as Apple, Google, and Nvidia are showing strength, and breadth is robust with the advanced decline lines hitting new all-time highs. On the flip side, consumer sentiment is low, and the Special K long-term oscillator remains negative but improving, and the Zohorchak method dropped from a 10 all the way down to 4, signaling weaker long-term momentum. Going through some key areas to monitor. Keep an eye on jobless claims. An upward trend could spark recession fears. A yield on the 10-year above 4.5% may pressure stocks. Watch the yield curves and tips for recession or inflation signals. Gold is declining, oil remains in the low 60s, and the dollar is rebounding. The U.S. to DAX ratio is fluctuating as U.S. stocks are regaining ground. Concerns include an overbought RSI, low volume during this past Friday's options expiration, and negative divergences, including the McClellan oscillator. In conclusion, the markets are riding a strong uptrend with broad improvements, but overbought conditions and negative divergences call for caution. We should stay vigilant when looking at jobless claims, yields, and global dynamics to gauge pullback risks versus continued gains. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available or to access the daily newsletter, please click on the links below.